Hi guys, how are things? Welcome to this week's update. It's the 30th of June. So what I'm going to cover today is the usual. I'm going to go through our portfolio. We're going to have a look at where the portfolio stands against some of the main indexes that we operate in, and also in some of the main asset classes that I generally benchmark my performance against. What I'll do then is I'll look into some of the stocks that I've been looking at this week. I've bought two main tech stocks this week. I'm going to run through why and the reasoning behind that. And then I'll have a look into crypto as well. But first, I would love if you could subscribe to my channel. And if you like this content, please like it, please comment. I really enjoy making this content. I think it's really beneficial for some of my followers and some of my copiers. I would love to do more. I'd love to make it more relevant. So I'd love your support there. Overall, we're 6% down for the month. I'm not overly worried, and this is in line with the crypto market, of which I have a lot of my assets in. The main things I want to bring forward though is this year we've got a 9% monthly average. To date this year we're 54.82% up. If you look back at my 12 months, we're 250% up. So in the longer term, I'm not worried about how we're doing. What I would look at as well is the previous week, where we're just under 2% up for a week, coming into the end of the month. So while we're red overall, I'm not worried. In the longer term, we've got some really, really strong positions in place in the portfolio, of which, you know, we've got plenty of recovery to do in the crypto market. We've got some really, really strong positions in some of the stocks, of which I'm going to go into in a little bit more detail in a few minutes. So let's have a look. The first one I usually go for is Bitcoin. You know, if you look at here, is this reiterates my point around the reason why I trim some of my holdings. If we were to hold Bitcoin, we'll say predominantly, we'd be basically just 19% up for the year. Last week when I did this update, we were actually negative in Bitcoin. You know, at the end of the day, it's a highly volatile asset, so you must also be willing to take the downside with the tremendous upside it brings. And the way that I set up my portfolio is that I want exposure to this, but I also want exposure to low risk assets, to stocks and ETFs. And this, in theory, is the foundations of why my portfolio operates the way it does. So again, you know, if you even the Nasdaq this year is overperforming Bitcoin. We'll throw in the S&P as well, just for some more context. Again, slightly higher than Nasdaq. For someone who holds quite a large amount of stocks, it's important that we are doing our best to outperform these indexes. So we'll take as well, I like to compare myself against Ethereum, little more volatile than Bitcoin. So you'll see this in the results here. You'll see this nice spike around mid-May, where we kind of topped out, you know, for this quarter, shall we say. So we've come down. You know, what you'll notice here, while it's overperforming, we'll say year to date, the drawdown has been far more significant than my portfolio. So, you know, the main things I take away is that we're still 54.82% up for the year. Yes, we've had 2 red months, but we've had some tremendous growth in the previous months to that. And the positions that we have right now are strong for the next 2 quarters and thereafter. Exposure wise, 46%, 46.25% in stocks, slightly less in proportion with crypto, and then ETFs. So this is the exposure of what's in the market. If we take another look in, you know, we've got a cash balance of about 32.77%. You know, for those of you who've been following my activity, I like to have at least 20% of a cash balance as a minimum. So if you look at it, there's about 12% there. Probably not all of that, but that 12% is going to be allocated to buying further dips in the cryptocurrency market, or to dollar cost average on some of my longer term stocks. So it's always good to have a cash balance like that for opportunities, because, as much as the market goes up in certain areas, it also goes down. So we want to be able to dollar cost average. So basically get the best price per the positions that we have open. So this is the reason behind the cash. So taking a look into where the risk lies in the portfolio, naturally it's in cryptocurrency overall. eToro like to give crypto quite a heavy risk rating, which I think is fair enough. But again, we are long-term on crypto. The risk for me is reduced when you take a long-term view. Sure, short-term, volatile, absolutely. But in a longer term, it is a very, very high-performing asset with some really good returns. I've bought some positions in Ethereum, in Bitcoin, some small enough positions, but again, roughly the average is between 30 and 32K for Bitcoin. I picked up a few positions for Ethereum around 1800. These for me are long-term holds. I want to make sure that we're trying to time the bottom of the dip as best as possible. Is it the bottom of the dip? I'm not sure. We can't be conclusive right at the moment, but if we do dip more, we still have that cash balance to pick up some good, cut price opportunities below 30K on the Bitcoin side if it does get to that. One of the other things I want to point out is there's been a nice bounce overall with the cryptocurrency market led by Bitcoin. The way that I look at it from a sentiment perspective, I touched on this in a post I did yesterday. So it's interesting to see how some of what would previously be described as bad news. We look at the Binance ban in the UK. Again, once you take a look into that, it's not all that it seems. Same with China's crackdown on the miners. This is not new news. We've always, every time there's a dip in the market, there's some news on China banning something or other. There's nothing new here. But the thing is that the price interaction with these negative pieces of news is actually quite strong, so it's actually going the opposite direction. This tells me that overall the sentiment is slightly changing. Now, is it a flip? I don't think so. However, it is certainly positive to really see that positive news brings positive or static price activity. There's some other rumors around Mexico looking to accept Bitcoin in one of their biggest banks. This is obviously, there's nothing conclusive here, but again, we must take these types of news pieces as, it's still speculation. It's not solidified. We take it as much as we take the bad news. But again, it's potential. If it's something that follows through, just like El Salvador, there was a lot of news in the background before that, and then it did get confirmed. So take it with a pinch of salt, but just certainly be wary of what you read and what you see. It's a very much a sentiment-driven market, particularly when there's been aggressive gains and aggressive declines. So just keep that in mind. Overall, I still think that there's been no particular confirmation of breakout. I think we're going to stay in the 29 to 40K range on Bitcoin before any significant breaks. As we can see, we're floating around the 35K mark after a decent pump over the last few days. So we'll probably see a dip, the usual. But until really we start testing each of the support and the resistance within that range, I think we're just going to bounce in and around, that price range for another while. But certainly, what I'll be looking for is, if we retest 29K, can we retest that? If we fall, are we ready to buy more positions in Bitcoin? If we do fall, the answer is yes, because of the cash balance I spoke about. If we break the 40K or that range thereabouts, can we capitalize on the upside? Yes, we can, because we've got a buy and hold strategy in place to do that. So having a look into equities, And again, as you can see, it's quite a big portion of my portfolio. So open a new position in Facebook. In terms of a stock performance, Facebook has been doing phenomenal across its 4 business units. So if you look at, even though Facebook has, I think it's 3.7 billion users, there's still been a 15% increase last year in the amount of users on the platform. This is across WhatsApp, Insta, Facebook itself, a Messenger. What the most important parts, though, I'm looking at is its advertising revenue is up 46% quarter over quarter. And so when you compare Q1 this year to Q1 last year, it's a 46% increase in revenue from its ads, which is, I think it's 98% of its business. So this is really, really strong. If we look at net income, in Q1 of this year, we're 94% up from Q1 of last year. Again, this is really, really strong. And this goes down to the stickiness of the platform, and also it's increasing users, but also in the amount of spend of each of these users. So these are very, very important factors to take into consideration. So Facebook are currently off the hook with the antitrust trial in the US. So what this basically means is, in the eyes of the law, they're not a monopoly. While they might have monopoly type activity, they're certainly not seen as a monopoly in the eyes of the law, and are therefore not going to be broken up. I think even if they were to be broken up, I still think each of the business units that are within Facebook, each are a very, very strong business in their own right. So I don't even think that in the long term, if a breakup was to happen, that it would really impact the business. But that's just my opinion on it. So one of the biggest areas that Facebook are investing in is around virtual reality and augmented reality. Their revenue from this business line alone is 150% over last year. And the market size overall in this area is expected to grow 42% annually. So there's huge potential here. Now, if you think about Facebook's existing 3.7 billion users, getting exposed to these type of products in this size of a market and this potential, that's where the next layer of growth for Facebook is going to come from. And from my side, for a stock that performs well in the short term and has the potential to perform in the long term, that's why I'm putting my money here. Next position is Baidu, the Chinese stock that is being compared to the Chinese Google. This again is another really important stock for me. They've recently beat earnings and revenue expectations by 20% and 3.5% respectively. It's their 8th quarter in a row to overachieve. They're looking to increase revenue this quarter to grow between 14% and 25%. They've also had some really good endorsements, some institutional buyers. There's more hedge funds getting into Baidu. There is more institutional money getting there. So, once the stock has more exposure to these larger companies, these larger profile buyers and investors, that's where the realization of the value kind of comes to the market. They're highly focused on AI, cloud, and driverless cars, which of course is, just as we spoke with Facebook, is the next massive industry to be disrupted and to also be capitalized on. So I think Baidu are in quite a good position there, particularly in the Chinese market. We could compare it against Alibaba, which I've also added to positions this week as well. Again, they're looked at as the Chinese Amazon. Very, very strong company, very, very strong growth potential. And that's why I am investing there also. So guys, if you like today's update, please subscribe to the channel. Please like this, please share. And otherwise, I will catch you in the next update next week. So have a great week. Thanks very much. Bye-bye.